Hey everybody, welcome back to Stock Trading Pro. My name is Pete Renzulli. We have a ton of stuff to talk about today. Two things that can absolutely rock the stock market today, which is the meme stocks seem to be back. Bed Bath & Beyond, BBBY stock exploded over the last few days, over 500% in just 13 days of trading. We also have the FOMC minutes today. So in case you don't know what the enormity is of the FOMC minutes, it's really where we're going to get the language what they plan to do going forward, how the Fed is interpreting inflation, what they need to do with interest rates. It is a big deal. It's, I believe, 2 o'clock this afternoon. We'll do a check on that. But what's very, very important is that it can move the market just as much as the Fed announcement itself. So if you happen to be on the day trading stocks part of the market right now, it's critical that you know about that this afternoon. If you're a longer term investor, maybe even a swing trader, just know that the volatility is going to pick up dramatically. It's been an absolutely amazing 5 weeks of short-term trading. Apple stock proving it is the boss of the stock market, just lifting the whole market on its back. I believe we'll take a look at it, but I believe it's 9 consecutive weeks in Apple stock that has made higher highs. Just absolutely amazing. But the thing we need to make sure that we watch as stock traders, anybody who's involved in Wall Street, you know those two important things, risk reward. So now we have to start weighing whether or not there is sufficient reward potential in exchange for the risk we need to take on new upcoming trades. So I'm really jazzed up. Hopefully you've been having a really amazing summertime of trading, which, by the way, critically important. We get questions all the time. Let me move my mic away. Questions all the time about, is the summer boring? Is the summer slow? Should I not trade stocks during the summer? Heck no. We are in a 24-hour news cycle right now. We are in instant stock market news right now. Algorithms are all over the market right now. There is no bad time to trade the stock market right now, whether it's a time of the year or whether it's a time of day, which, by the way, that's a big thing that day traders ask us all the time as well. I'm actually loud. That's how psyched I am right now for trading. Even during the day, and if you are on the day trading stocks part of the market yesterday, we had the biggest move of the day again in the middle of the day. As a matter of fact, I think 2 days in a row. So that old school trade the first hour, trade the last hour, that's out the window. There is opportunity all day long in the stock market. Now, we might get a little bit of profit taking the rest of the week after the Fed announcement. So the language is going to be very, very important about what they plan to do going forward. However that language gets interpreted is going to end up probably being how we're going to trade for the rest of the week. I know that sounds like a lot, but this is what it takes to act and think differently in the stock market as somebody who expects to make money, which is knowing what you expect to happen and then knowing what you definitely plan to do. That's a big part of it, because then you're never going to be surprised. You have it all written out. You put it in your iPhone and bam, that's what you plan to do. So now I sound like Emeril Lagasse. I don't know what's going on. Anyway, I am super excited. And yeah, Don, that's actually very, very important. That used to be the quote. And if you've never day traded stocks before, that was actually a big thing as well, where you kind of trade the first 50 minutes of the day and then stocks would go in the other direction and then they would pick up again and you trade the last 90 minutes of the day. That's not the case anymore. Stock trading has opportunity pretty much all day, every day. You just have to be at your desk. And same thing with swing trades, to be available for the optimal entry on those stocks. So hopefully you can tell that I'm super jazzed up right now. Stick around. Be back in just 1 second. Okay, so thank you so much. I didn't want to leave your host waiting there. Everything we talk about here is for educational purposes. It's my job to help you make better decisions. It's up to you to make that final decision. If I do a good job, if I could just ask you for a favor, just do me a favor, smash that like button and make sure you hit subscribe if I earn it today. That's why I want to put myself out there, if I earn it. I'm also going to introduce you to today our new swing trade newsletter. So if you happen to be on the swing trading side of things, where you have a full-time job or you don't want to be sitting in front of your screen all day, I'm going to show you our swing trade newsletter. I'm going to give you an opportunity to get this week's sample copy just to see what everything is all about. I want to make sure I say hello. Sunil, good morning, Sunil. How's it going? Thank you so much for being here with us today. John A., always a pleasure. Always a pleasure. And Tony, good morning, Tony. All right, so I want to get right into it. We're going to actually talk right away about BBBY. We actually measured this move over the last week or so, and I think we went from over here to here, which I think you can see is 13 bars, over 500%, over 500%. Now, why did this happen? It's very similar to what happened with the Reddit meme stock mania, the Wall Street bets crowd, targeting, I think brilliantly, 100% okay, nothing wrong with it, targeting stocks that have a short float, and then a lot of people combine to start buying those stocks. Now, I want to point out why that happened. It's one thing for a stock to have a short float, which BBBY stock now has a very big short float. So let's first take a look at what that means and how to find that. So one of the most common things that we take a look at during the day is we go to finviz.com and we're going to type in BBBY, right on the top there, Bed Bath & Beyond. And if I bring this in just a little bit more, you're going to scroll over here for the short float. And then you can see short float is pretty darn big. 42% out of the shares that are out there are 68, right? So what does that mean? Wow, that's fancy, right? That's Wall Street talk. That sounds fancy. What does that mean? Short float and a high short float. Let me put it this way. Anything over 20% is considered a pretty high short float. BBBY stock right now has more than double that amount as a short float. Now let's talk about what short float means and why this would actually happen. So if we go back over to the chart of BBBY, and you can see actually here, it's over 500% in that very short period of time. So let me actually get that off of the screen. And for those of you that are not on the day trading side of things, let me just give you an idea of what this kind of move was. You're talking about here where it broke out early in the morning at $16 and change. It went all the way up to 28 and change. So a $16 stock had a $12 move just yesterday morning. Now, the thing is, why does that happen? Why did those Wall Street bet traders from Reddit pile on top of these stocks? So we need to know a little bit of history, number one, about the other stocks that it's happened to, and number two, why it happens and why it's such a powerful thing to understand. But you need to make a decision. Is this kind of volatility the smart thing for you? I'm going to give you full disclosure. In my boot camp yesterday, in our game plan meeting yesterday, we discussed these kind of trades. And I was very clear that this is not for everybody. You need to be very quick at making decisions. You need to be very quick at placing orders. And this needs to be true risk capital in the stock market. These stocks can move very, very fast. And just to bring this really home, so I hope this really hits everybody. You really have to think through. Again, we say, go and look in the mirror. Is this kind of stock market opportunity the right one for me? If you don't make fast decisions and one of these stocks rallies and you get caught, this stock pulled back $7, $6. And then you see over here, it rallied and was up to 28 and pulled all the way back down to 18. That's a $10 move. A $10 move in not even an hour. If you get stuck by only looking to the upside of the stock and don't manage the downside, or you can't make those decisions fast enough, this might not be the opportunity for you. So again, this is all for educational purposes, but I'm trying to give you both sides of the equation so that you could make that decision. Can you make fast decisions? Can you place orders quickly? Can you accept the fact that if that stock stops going down, you have a plan to get out of it quickly and make that decision, put an order in the market, whatever it happens to be? If you match all those things and you're able to do all those things, we just want to go over a little bit of history, and we're going to talk about the other stocks that this has happened to. So I think that the first big one that happened to was GME, and you can see the spike here. You can see the spike here. You can see the spike here. But I think this here is the one that really put meme trading stocks on the map in 2021. And the same thing happened a couple of times here. AMC once, AMC stock twice, AMC stock 3 times. And now the big question is AMC stock ready to have the same exact thing happen again? So if we go over here to BBBY stock, 3 B's and a Y, what I want to talk about here is I want to talk about what it means that a stock has a big short float. So I want to be very clear about this. AMC stock, GME stock, BBBY stock. It's even happened to BYND stock recently. Just because a stock has a big short float is not a definite that this is going to happen. What has to happen is a group of traders decide to buy that stock for whatever reason, no different than anybody watching CNBC or Jim Cramer, everybody decides to hop in that. This happens to have rocket fuel. So if you think about what happens, a short float means that there is a group of market participants, a group of stock traders, a group of investors believe that it's going down. So if they believe that it's going down, that means that they sold the stock that they don't own. And that's normal. That's what short selling is. So if you take a look at this, and we'll actually bring this out just a little bit more so you can see how big this move was. Pretty amazing. So what we're talking about here now is if this group of players bet on the stock going down, it needs to go down. But now there's a large group of people. As long as that stock is staying there or going down, they're okay. If it goes down in the way that they believe, in order for them to get out of that trade, they have to do what's called cover that trade. So when you short sell stock, to get out of it, you cover it. When you cover it, you buy it back. The other side of the trade, everybody knows you buy and you sell, right? But when you sell short, looking for it to go down, to get out of that, you do what's covering that short sell. And you know that language because everybody has heard of a short covering rally, which takes us back to what we mean by that short float. So if we go back over to BBBY and we take a look at the short float, a full 42.48% of the shares outstanding have a short interest in that right now. That is a gigantic, gigantic number. So right now, they might have panicked already. I don't know. But if a short seller needs to get out of the stock, and when there's a large group of people that have short interest, in order for them to get out, they have to buy it back. So you have those people who bet on it going down, buying it back. That creates one wave of buying pressure. Then you have active traders, for example, Reddit, those meme stock players, the Wall Street bet people, and quite honestly, everybody else is looking to trade these stocks, right? Hopping on board. So the short sellers, the people that made that short float, they have to buy it back to get out. Now you have active traders who are seeing this going on. They're buying it. So now you have two different groups of traders actively buying this stock that has this huge group of people that need to get out because they butted on it going down, and now it's going up very quickly. This is where these meme stock explosions in price action can happen. It happened in GME stock in a big way multiple times. It happened in AMC stock, and that's what we're looking at. Is AMC stock next? AMC stock has been pausing. If we take a look at AMC and GME, so AMC here, you can see it's actually had a little bit of a spike, and now it's been pausing for about 5 days. GME as well, pausing for about 5 or 6 days, and now the stock just exploded a little bit yesterday. So how do you handle this? What do you do? We just talked about it. Now, the reason I'm kind of giving a public service announcement here for active traders is these are not expensive stocks, and it's very easy for the average Wall Street participant, anybody in the stock market, to get a decent amount of shares in these stocks, whether you're trading cash or leverage, that's completely up to you. But I want you to be prepared that if first knowing the entire universe of what's going on, why meme stocks exist, like where they came from, how it happened, the most popular stocks that meme stocks, again, GME and AMC stock, probably the poster childs for those. But more importantly, you need to be actively engaged in these stocks. If you get caught frozen and you don't make a fast decision, or if you don't know what your decision is going to be, or if you don't have a stop loss in the market, just in case, this can be a very expensive Wall Street lesson. So again, I'm saying this to you as my friend, as if I was teaching my nephew or my wife or something like that. You need to trade this with a stop loss and do not move that stop loss. There's a lot of upside, but you have to be honest with yourself. Can you make fast enough decisions in these kinds of stocks? So I just want to be very clear about that, because I want to be your friend just as much as anything else. Again, I'm not your financial advisor, but I do want to alert you to the opportunity of meme stocks, specifically BBBY stock, the way it's exploded right now. 515% in 13 days is a massive move. Could it continue to go? Sure. But you need to be watching both sides of the trade in case it comes down. So it needs to be true risk capital. So that's the GME, AMC stock, BBBY stock, and that whole history. It's very, very interesting. So if you want to take a look at any stock, we could actually, it's kind of cool, right? So let's actually go over to a different stock we just looked at, just to give some context. This has a 42% short float. If we go over to a different stock that everybody knows, such as Apple, look at the short float in Apple. It's less than 1%. So that really gives you an idea of the way that the stocks actually are perceived in the market, and bet on whether or not somebody's going to bet on those stocks going down or not. So look, it's a phenomenon that's a part of Wall Street right now. That's absolutely just amazing. It's amazing to watch. And if you have the discipline to do it, make sure that you have the both sides of the equation, right? Let's see. I just want to say hello to a couple of people. David, excellent. Thank you so much for being a part of the boot camp. I really appreciate it. Arthur, thank you. You were also in the boot camp. I want you to know how much I appreciate that as well. I want to say this correctly. Elvlum. I hope I said that right. Thank you so much for being here with us today. Let me see. You know what? That's exactly the point there. And I want to make this clear. Okay. Martin's saying seems too risky to trade these stocks. Risk is relative to two things in the stock market. Number one is your ability to identify good ideas. The true risk in the market is the quality of the idea. The second part of risk is making sure that you can handle that kind of risk. And if you can't, you just make a decision to stay away. So thank you for putting that in there. I really appreciate it. And I think a lot of people really need to understand that. So let's hop on over now to some of the other big ideas, big things that could be rocking the market. That's actually the first one, right, is the GME stuff. So we're actually going to leave that right now. We're going to come over here to the Fed minutes. The Fed minutes come out this afternoon, and this is really what we're looking for is the language. So when Jerome Powell and the Fed speaks this afternoon, which I believe, yeah, here it is, 2 o'clock, they're going to discuss what they talked about on the July 27th meeting. Normally it comes out at 2 o'clock this afternoon. We'll see if we can find the exact time. But the big thing that we're talking about right now, everybody knows inflation and how inflation is affecting everything in the stock market. Crude oil prices have come down quite a bit, so it's kind of lowered that part of the consumer price index, right? But look, let's face it, go out to lunch right now. Has the cost of lunch or anything at the supermarket come down? No. So the biggest lever that the FOMC committee has and Jerome Powell is to adjust interest rates and the money supply. Those are the two things. We all know quantitative easing last year, which was them adding things to their balance sheet. Now they're going to be doing the opposite in quantitative tightening. So quantitative tightening is in play right now, as well as the next interest rate hike coming up in a few weeks. So the big thing we're going to pay attention to for in the language in the Fed minutes today is how they describe how they're interpreting inflation right now. Transitory seems to be the language. And if we can get clues on if they're hawkish or dovish going forward, are they planning to raise aggressively at the next FOMC meeting, or are they going to kind of take their foot off the gas pedal? And instead of it being 3/4 of a basis points, is it going to be a half a basis points? We'll see, but that's the language. But more importantly, as a short-term active trader, and I want to tie this into what the market's doing right now. So it's not coincidental that if we take a look at the S&P 500, the SPY, all of this is happening right at this significant resistance level. And you can see the futures are actually down a little bit right now. If we go over into the S&P futures, we're down around 36 points right now. Now, not a coincidence, but I want to really bring this home in a big way. The market, especially if you're on the day trading side of things right now, is probably going to be very stock specific today because the market is waiting for this announcement at 2 o'clock. There's been some amazing trades in tech stocks over the last few weeks, even this week as well. Energy stocks had some ideas this week. Just as an aside as well, I want to point this out just to really bring this home for you. If we go into this week's and today's trading, you can see that consumer cyclical has worked its way all the way up to the top. So just to give everybody some ideas of what we're looking at today, consumer cyclical, financial, and industrial. So technology working its way down the list. They're cooling off just a little bit. And I think that's because the risk reward ratio. So one thing I want to give you that's kind of like an advanced thing that's super easy to do. Notice over the last 5 days of how your stock is trading. For the last 5 weeks or so, we've been seeing 5-day gains of 5%, 10%, 12%, some stocks even more, where they've just absolutely exploded to the upside, and the percentage gains have been amazing. But now we're starting to see those 5-day percentage gains come down a little bit. So what does that tell you as a smart trader, as somebody who's involved in the stock market and really on top of your game? It means that the momentum of those gains has slowed down. So what that means from a common sense perspective in the market It's our job to set up trades, whether it's a trade or an investment, that the reward potential and the continuation of that move is likely. That's what we're setting up. When we can determine it's likely and the potential reward is worth the risk, that's when we buy with confidence, expecting to make a profit on that trade. But here's what I want to point out to you. And we're going to actually do this we're going to go right back to FinViz, because this is actually a pretty important part of FinViz. And you look over here on the maps, right? So if we look at it, you can see over the one-day performance, not only are some of the large cap stocks not producing positive numbers despite the market being up again. If we go over to the last 5 days, you can see that they're still up, but the numbers are coming down. And by the way, in this box right here, the size of the box is the size of the market cap. So prior to the last 5 days or so, these numbers were up in the much bigger numbers. They were up 10% and much higher numbers than that. And now we've cooled off a little bit. So with the FOMC minutes coming out, the interpretation of the FOMC minutes, the percentage gains over the last 5 days slowing down a little bit, and as we just showed you, the SPY at resistance, which you can see over here, if we go back over here, the ETF for the S&P 500 coming up to a level where sellers did something significant prior to that. We have a big mix where, and I'm just going to say it because this is how I start to game plan things, because the percentage gains are slowing down a little bit over the last 5 days, and the market's at resistance, and the FOMC announcements coming out right now, and we're winding down earnings season. So a lot of that earnings play, which we're going to talk about another earnings stock in a second, all of that combined, I do believe the market's going to see a little bit of pressure taking off right now. I think we're going to see a little bit of profit taking between Wednesday and Friday. So today through Friday. Now, that's not the worst thing in the world, because now if we're looking at opportunities to swing trade stocks, which let's say we're holding it over 3 days to 3 weeks to a month, whatever the time frame happens to be, if this is what the stock normally does, and the last bunch of days it's already done this, there's not a lot of meat left on that bone. So we need to expand the profit potential again. So if this is what it normally does, and that's what it is, a pullback will now expand optimal entries, will be better, and will expand the profit targets. So some of the ideas that we're looking at right now, and you want to take a screenshot of this because this is kind of important, is they've gone higher, but the stocks that have stacked order flow, which you can see there's 31 of them right now, you can see that they are not necessarily at the optimal entry. Now, what's really important about this, and again, we get this question all the time, is how do we dive deeper into where the smart money is? So if you take a look right now, these are the stocks that meet the stacked order flow over the last 5 days, 21 days, yesterday's opening price, which means they had a big green candle, and net change from the previous day. So it's stacked in 4 different ways. Look at consumer cyclical here. You probably want to take a snapshot of that and start to take a look at some of these stocks. Now, what's interesting about these stocks is we're getting into a lot of stocks now that are kind of get out of the house stocks. We have EXPE, Dick's Sporting Goods, Royal Caribbean, Caesar's Palace, Hilton, Marriott, right? A lot of these things are in the same area. We also had earnings this week from Home Depot, which had a good move. We also had earnings from Walmart, which actually now we're going to hop on over into Target. Let's take a quick look at Target. Target's profit dropped more than expensive. So let's actually do this in real time. Let's take a look at that. So Target's down 2.5%, which actually got a big boost off of the Walmart move from yesterday, and Walmart pulling back just a little bit. So there's a mouthful of stock of what's going on right now, but I just want to give you my game plan for the current week. Now, here's the thing that a lot of traders, a lot of people involved in the market get kind of stuck on, and it's super important. And I want to say this quote again, because you might have to rewind this. Maybe I'll make a little bit of a billboard for it, but it's our job to know what's probably going to happen, which is why we put on the trade, why we buy stocks, because we feel that there's a good chance, a probability of it moving in the direction, our profit target versus our stop loss, probably going to happen next, and what we definitely plan to do. So if my game plan this week, from now going forward, where we're probably going to see a little bit less volatility, a little bit lighter volume until the FOMC minutes are announced today, I'll be very stock specific. So I'm going to work my way up that power pyramid, which let me just show you again. If you happen to be a new member of our community, I'm just going to pull this up here for you and make sure that you understand what we're talking about. So if we look at the power pyramid, we're probably going to be a little bit more up here and a little bit here. These part of the market here until the announcement probably going to be a little bit more less big commitments made, right? So we're going to be focusing on groups and we're going to be focusing on stock specific stuff. So what stocks does that mean I'm going to be taking a look at, right? So that's my plan. That's the way I think it's going to unfold. I think there's going to be a little profit taking. So best case scenario, some of these really strong stocks are going to pull back for a couple of days and set up a new good swing trade for me to make as the next idea. Okay. So here are a couple of ideas that I just want to talk about for today. Okay. So we're actually going to bring in Google, believe it or not, GOOGL, still resting at a breakout level. And you can see it's got plenty of room to go if the stock breaks out. We also have Amazon resting right on a breakout level. And one that we have not talked about for a while right now is Meta Platforms. Now you can clearly see that Meta has been in this box for a while. Earnings came out, but now we're safely out of that box, got a little bit of resistance, and the next area is up here close to $200. So some pretty interesting setups over there in those stocks. And I want to point out one that I love trading financial stocks. I actually did a video on Monday where I talked about, if you want to take a look at that, I'll post that at the end of this video. The 5 tech stocks that I trade pretty much every week, definitely often, that's for sure, most every day. I'll post that video at the end of here. Those are the tech stocks, but I love trading financial stocks. Now, the bank stocks have not been in play that much. Citigroup and Wells Fargo, they've pretty much been moving and then go sideways for a couple of weeks. There's two financial stocks that I want to point out right now, and they're actually credit card stocks. One of them is setting up perfectly. The other one is resting right at a breakout level. I might give it a couple of days, but those two are these stocks right now. So the first one is Visa. And you can see Visa right here, right at the break of this breakout level. And if we kind of zoom out a little bit, it's interesting. I like the breakout, but not really awesome profit target. Maybe $10, which is not really fantastic for a financial stock or a $200 stock. This one, on the other hand, looks pretty darn interesting. And if we zoom this one out here, AXP stock, we're talking about the next level being all the way up here towards 190 and change. So we're talking about over $20 on a $170 stock. And if we kind of put that in there, that's roughly looking at a 12% move, which is not that bad. Now, the big thing I want to get across here, which is kind of important, is understanding how to build a position. There's stocks where you buy them and there's all that room to go and they look awesome and you're pretty confident when you buy those stocks, you're getting the right share size. But there's other ideas where you love the idea. If it clears a level, maybe that would be a better idea, but you want to put a small piece on first. And we call those two-step trades. So American Express here, while it's setting up as what everybody knows as a classic technical analysis pattern, which is a bull flag, there's resistance just above here. So this trade for me in American Express is going to be a two-step trade where the first piece will be coming out of this bull flag. The second piece would be a bull flag over the resistance level that I'm about to show you, and then look for the target. So let's actually take a look and see what that looks like on the chart. So this is the bull flag. Let me zoom this out a little bit. This is the bull flag. This is the resistance, and this is the other target. So what the trade right now, and let me map this out for you perfectly, would be a buy out of this bull flag with a stop loss just below the bull flag. So probably down around 163, maybe just a little bit lower. Then we have the resistance up here around 170. So the first piece here for me, the second piece would be a similar push and a pause above this resistance level. And then the initial target above that would be up there. So that's how I'm going to map out that trade in American Express. So I thought it was kind of cool to compare two stocks. They're both stocks to consider buying, but Visa, for the profit potential for a $200 stock, is not as exciting or doesn't make sense from a math perspective as this potential trade in American Express. Now, I want to go back to what I said before. That's the game plan. What's probably going to happen and what I definitely plan to do. If I put the trade on in American Express and it breaks out of this short-term bull flag chart pattern, if it breaks out and comes back, I only have an initial piece on. If the Fed announcement comes in and rocks the market in the other direction, it's only my first piece. So I'm very intentional that my risk is lower on the initial trade if it trades above the bull flag. If it never trades above the bull flag, I'm not getting in at all. I want to be clear about that. We get questions all the time. Well, if you like it, why don't you buy it now? Because I want to see it take out those sellers that are holding it there. There's something in trading called holding the bid or holding the offer. Holding the bid means it goes up and it's not going down. So buyers are underneath that bid. In this case now, sellers are holding it. I want to see them push through those sellers before I get involved. I want to know those sellers are out of the way. So if it goes up, I just gave you the scenario of how I plan to add and when to add. If it goes up and pulls back, I'll take a small loss. If it trades down and never goes above the bull flag, I'll just leave it alone. I'm never going to get in it because it's not doing what I planned. So we'll just take a look if you want to take a screenshot, but I have something else for you right now. So if you want to take a screenshot of that, that's the entire trade. Here's the bull flag. Here's the resistance. I'm looking for another push and a pause up here to add, and then that's going to be the target. So what I'm also very excited about right now is we've kind of working behind the scenes where we have a new swing trade newsletter for members of our private community. I wanted to give you a sample of that swing trade letter today. It's going to be a sample for this entire week. You can actually grab this sample right now. You'll see Monday and Tuesday in there. I think it's kind of fun for you to see how we map things out, what news we think is significant, what stock market news is, stocks that news that's tradable, also how we break the market down and that kind of stuff. So in the description and below this video, I posted a link to a sample newsletter that's for this week. Dig in there. If you have any questions, leave a comment below the video. I'd love to get your feedback on it. Hopefully, if you're a swing trader, you'll find it valuable. And if you have any more questions about this, just let me know. There's going to be a link on that newsletter as well. All right. Thank you so much for joining me here today. I really appreciate it. Have an awesome day. Remember, the Fed minutes come out at 2. I'm pretty sure it's 2 o'clock today. Check your calendar, and it's going to create some volatility. So it's going to give us a tone for the rest of the week. Thank you so much for joining me. I can't tell you how much it means to me. If I earned it today, please do me a favor. Make sure you click down, click subscribe, hit that like button. I'd really, really appreciate it. Have an awesome day, everybody. Have an awesome finish to the week. Rewind this video and watch our game plan for the week. I think it's going to be fun to see how it unfolds together. Have a great day, everybody. I really, really appreciate your time with me.